Hi, this is Jerome, market strategist for IG Singapore. Wall Street continued to extend its rally last week, with the S&P 500 delivering yet another new record high as rate-sensitive growth sectors powered on. Notably, stellar gains continue to be seen once again in the semiconductor names. Thus far, Fed Chair Jerome Powell's testimony has also fallen short of the hawkishness that was initially expected, paving the way for market participants to bask in optimism for impending rate cuts from the Fed, potentially with the first cut in June this year. The new week may see a quieter front on the economic calendar, but nevertheless, there are three key data on watch. First up, we have the US CPI data out on Tuesday. After Wall Street managed to shrug off the hotter than expected US inflation data for January, traders will be closely watching this month's CPI for the conviction that previous hot inflation data is just a one-off. The expectation is for headline CPI to rise in February by 0.4% month-on-month, which would see the annual rate remain stable at 3.1%. The core CPI is expected to rise by 0.3% month-on-month, down from the previous 0.4%. Next up, we have the UK monthly GDP data out on Wednesday. The UK economy has dipped into a recession for the first time since COVID-19, leaving markets on watch for any signs of improvement from the upcoming GDP data. Further contraction in growth may raise bets that the Bank of England may shift to a faster pace of interest rate cuts this year. Thus far, interest rate futures suggest that broad consensus are priced for the central bank to cut interest rate only in August this year. Lastly, we have the US consumer sentiment data out on Friday. The US Consumer Sentiment Index has been on a recovery trend over the past 2 years, and further improvement may validate soft landing hopes, given that historical recessions in the US tend to be accompanied with a sharp weakening in consumer sentiments, and it clearly does not seem to be the case with current trend. Ahead, expectations are for the preliminary reading for March to come in at 77, a slight uptick from the previous 76.9. That's all for now, and I will see you next week.